What is up? What is up? This is your boy. You already know what time it is. This is your host, founder, Joshua Taylor of Break into the Future. I got my guy here, Nathan. What is up, man? How are you doing today?
Josh, thank you so much. It's a pleasure to be here. I'm really excited about our conversation, to go down deep in the rabbit hole.
Yes.
But I'm also excited to share some of our conversations with our audience.
Yes, let's get it. Let's get it. Let's not waste any time, man. The
For sure.
people want to know. The people want to know who you are, man. Who are you, Nathan?
Sure. So my background is in traditional finance. I studied finance and accounting, and I worked at JP Morgan. It was my first career, is what I call it, for almost 6 years as a financial advisor. And so what I did there was really just helping families and individuals who have accumulated a certain amount of wealth and helping them invest their assets. Because of my background being Hispanic and coming from a Colombian family, my focus was always LATAM. So I helped Latin American clients. I was in New York and in Miami with JP Morgan, helping clients from Argentina, Venezuela, Colombia, Uruguay, just helping them understand their portfolio allocation, how they should be investing, and really just generally understanding markets. When I left JP Morgan, I really wanted to take my swing at being an entrepreneur. And I started a company called Wash My Whip, which was a tech-enabled car care company. Grew that business to 13 cities, 65 employees. At the time, that was 2016. And that's when I was introduced to Bitcoin, actually. My co-founder in the business introduced me to Bitcoin. And coming from finance, I saw Bitcoin and I was like, this is really interesting because I've made international payments and wires before, and I see the time it takes, the fees I'm paying, the amount of banks that are included. And if I can send value or money to someone anywhere in the world, that was my initial idea. That was like the click in my mind. And I instantly said, wow, there's something here. And so in late 2016, I bought my first Bitcoin. And in 2017, actually, with that co-founder and a few others, we started one of the first 250 hedge funds in the crypto space. And we started that in 2017, right before around the boom up to 20K. And then in 2018 and 2019, and really up to now, I've spent a lot of my time working with financial advisors, family offices, and other institutions in LATAM, focused in LATAM, that want to understand crypto and most recently DeFi and how to invest that and how to be part of their portfolio. Because having the fund, I learned a lot about how to invest, and I really believe, and this, I hope it doesn't upset any listeners. I really believe the way to invest as an individual and as an institution and to be part of the ecosystem is not through a fund. I think you should do it directly, and we can talk about that.
Man, this is God's aligning something. And for the viewers out here, you'll know, my good faithful viewers, we're not big yet, but we will be worldwide. I have great people like Nathan that has a global viewpoint, but also you are Colombian.
Yes, I am.
From Colombia. I have like 15 questions I want to rattle off, but I won't shoot it automatic.
Go ahead.
Were you born in Colombia or are you a first gen American?
So that as my background coming internationally, it's a little bit more complicated than that. So I'll tell you.
It always is.
We are a family of four.
And
my parents are both born in Colombia. My sister was born in Colombia, but I was born in Miami, Florida.
That's where the Miami connection comes.
Yes, exactly. I was born in Miami, but actually, I was born in Miami by coincidence because my family had moved to Miami, and then when I was 5 years old, we moved back to Colombia. So I lived in Colombia from 5 to 10. And then when I was 10, where there was some more instability in Colombia politically, our family decided to come back to Miami. And so we were always between back and forth. I always had family here, family there.
Yeah.
And so that's the connection.
Yeah. Do you have dual citizenship?
I don't, just because I was born here. Actually, a funny thing about dual citizenship, I do have dual citizenship, but it's not with Colombia.
Wow.
My mom's family, before she lived in Colombia, they're all French. So I do have a French passport as well.
Oh, you're a global citizen, man. You need a global passport.
I am. One day they will have global passport, but you know what is global? It's cryptocurrency.
Hey, there you go. The internet, right? That's
Exactly.
cool. That's awesome. That's really cool. So you do the whole, the cold college thing. You go traditional finance. You're killing it across the Latin American circuit. You start a company. What made you want to start a company? Like what you're like, oh, I want to do like technology enabled like car washing. Was it just like I have a problem I want to solve, or was it just like, oh, I think this could be cool because I'm just looking at this part of the market?
Well, look, I'll tell you it was a multitude of reasons, and it was a culmination of those reasons that led me to take the jump.
Yeah.
Since from my early days at JP Morgan, I was always very entrepreneurial, but I wanted to learn more about the business world, the corporate culture, how organizations worked, how things got done.
Yeah.
And so I wanted to soak in as much as possible at JP Morgan.
Yeah.
That said, most of my clients there who were, millionaires, 100 millionaires, and billionaires,
entrepreneurs,
were all entrepreneurs. Exactly. Yeah. Either they were entrepreneurs or someone in their family was an entrepreneur. One way or another, either third generation, first generation, whatever it might be.
Yeah.
And so I always thought to myself that, hey, I know regardless of what happens, if I go on my own and I build a business, it could be the biggest failure ever and I don't make any money. Yeah. But the experience and the learning that I would be able to do is so much bigger than any money that I could really make off my first venture. And one of the biggest statistics that I always believe is the average entrepreneur, successful entrepreneur, has 3.2 failures before they have a success.
Yeah.
And so what that tells me is like, look, I need to start early and I need to get those failures out of the way. Yeah. And that didn't mean that I wasn't going to give it my all. And, I love sports and I know you do too. Yeah. And I was going to leave it all on the field.
Yeah.
And so it's like when you play a game of basketball, soccer, whatever you're playing, and you finish the game and you gave it your all, it doesn't matter as much if you won or if you lost, but what matters is the satisfaction that you did everything in your power to be able to do that.
Yeah.
And so I'll tell you a quick story because I find it very interesting and people don't believe me, but I left JP Morgan, a plush, cushy corporate job.
Yeah.
And the next weekend, me and my corporate founders, my co-founders, we were launching at a outdoor festival, right? And so our whole idea was kind of like an Uber for car wash, and we were using eco-friendly car cleaning materials that didn't require water, and that was kind of part of our thesis. And so we thought we were going to hire a couple people to help us clean the cars, and we're going to launch there. Turns out that none of the guys that we hired showed up.
Yeah.
And so we were getting people to sign up, download the app, request car washes, and they did. And when there was no one to clean cars, guess who was cleaning them? Me and my co-founders.
Yeah, you.
And so we left, a corporate job making hundreds of thousands of dollars, and the next day we were cleaning cars. And we did it with a smile on our face. And you know what I learned that day? I learned that it doesn't matter so much like where you are in your journey. It's just that you're following your passion and your dream, you know? And I was so happy to clean those cars because I was like, dude, I'm earning this customer with my sweat, my blood, and my tears. And it didn't matter that I was cleaning someone's extremely dirty car with cat hair inside. But I will always remember that story. And it also serves as a great example of what I'm willing to do to succeed.
Yeah.
You know, I don't come from a background or family of extreme wealth. I've worked for everything that I have, and I'm happy because of that. You know, and I'm happy that that is my story. You know.
Yeah, that's awesome, bro. We can go like a whole nother direction, but I know
Yes.
we want to get to this DeFi. So it's like all roads to DeFi are getting super Nathan inspirational life. I'm just, I like those
We
DeFi.
can go. We can go either way,
So
man.
anyway,
Either
this is
way,
only part
wherever you
one
want to
of,
go.
yes, this is only part one of you. We're gonna have you back, but
Yes.
this is
Yes.
awesome. So you did that. You guys had a successful. Did you all exit that company? Or
So no, I'll tell you the ending story. Basically, one of our biggest clients at the time was Uber. We landed a partnership with Uber, and that helped us scale our business to 13 plus cities. And Uber, long story short, I don't know how much of this I can share because I do have some NDA, requirements. But basically, Uber, when they had their issues with their past CEO, he was our biggest proponent of the partnership that we were doing, and we invested a lot of our capital, resources, and human into building that partnership. And when he got fired, we were the last ones to find out that they were shutting down that entire business unit.
Yeah.
And so when that business shut down, it was kind of, it happens all the time in startups, is you have to take the good and the bad. And we had to make a bet at that time. We're like, look, do we want to focus on building the business with Uber, or do we want to diversify and have other clients? And granted, we worked with like Mercedes, Ford, Lyft, CarMax, but still Uber was the largest chunk of our business. And when Uber shut down from 1 month to another, and we had 65 employees on payroll, we had to make a couple decisions, and we decided not to continue raising capital and doing that. And we kind of just sold the pieces of the business as we could in different regions, and continued working where we could, and try and recover as much capital for our investors.
Yeah. That's real. That's real. Thank you
The
for
startup journey.
Yeah. Still a great, like you said, you got to learn what you could never learn behind the desk. And
Yes.
you learn what you needed to learn at the desk, though. There's nothing wrong with being at the corporate job. You had those sharpening skills. Hey, I'm cutting my teeth here so I could apply that to the next step. And then you had the Bitcoin step, which led to the hedge fund step.
Correct.
Talk about the hedge fund and explain to the people want to know, what is the hedge fund? What's the whole purpose of a hedge fund? And how do you get into that?
So hedge funds traditionally, in traditional finance, are basically a vehicle, and it's worth to explain the word hedge. What does the word hedge really mean?
Yeah.
Hedge is kind of, think of it as insurance. So people want to hedge their positions. People want to hedge their exposure. So, if you have a car, you need car insurance. If you own stock and you want to hedge that position, there's plenty of ways to hedge it. And so hedge funds became very popular when they started offering sort of more exotic, more advanced strategies to traditional investors. Hedge funds are very different than like private equity, because hedge funds are not investing in private companies. It's usually public markets, public companies, and liquid investments, but they're doing a lot more exotic, more aggressive sort of investments where they aim to offer outsized returns.
Absolute.
Exactly.
Absolute value, alpha.
Absolute value, alpha. They want to provide alpha. And alpha, just for the record, is returns over and above benchmark. So if a hedge fund is benchmarked to the S&P 500, they want to give you a return better than the S&P 500, because if not, what's the point of investing with them? You can just buy an ETF.
Mm-hmm.
So when I was introduced to crypto and Bitcoin, I immediately thought, wow, this is a huge new investable asset class. There were, 3 other partners at the time, and we were like, let's start this fund. We thought that we could raise some money, and we did. We raised a couple $1 million, but very quickly, and this is, a fast forward to right now. Very quickly, I realized, number one is there's a big difference in advising other people's capital and actually having their capital in your pocket, because that's what people do. They deposit their money with you, and it's up to you to figure out where to put it. Mm-hmm. The issue with that is, specifically in crypto at that time, the back office administrative tools and platforms were not built out. Mm-hmm. So just to keep the administrative tasks up to date, to be able to track, your transactions at different exchanges. Back then, there were tons of ICOs and airdrops, which are not as common now, and different forks from coins. And when you're a fund administrator, you have to report every month to your investors, hey, this is how much money we have. This is what happened. Yeah. And so from an administrative standpoint, that was a huge headache, which explains why there weren't that many hedge funds at that time, by the way.
Yeah.
So at that time, we recommended most of our investors and ourselves to redeem in kind most of the positions that we invested in, which what that means is basically, instead of taking cash back, take all your crypto back, store it on your own wallet, and just hold.
Yeah.
And that's what we did.
Yeah.
And so in the meantime, what I've been doing and where I've been working mostly is advising from a third party point of view. Hey, this family office wants to learn more about crypto. They need an expert to come and provide a teaching. I'll come in and do that. Some family offices are ready to take the dive, and they want to learn, how do I invest? What wallet should I be using? What exchanges should I be using? Yeah. And then some family offices, a lot more advanced, are doing DeFi strategies where they're actually doing some, liquidity mining or doing yield farming. And I help them kind of do that and position their assets accordingly.
Yeah, so full circle, right?
Yes.
Back in the financial advisory role, but you've had a founder hat. You've run a hedge fund. You're leveled up to where, hey, I'm in the big boy seat with the family offices.
Whatever it takes.
Yeah. How did that happen? Was it just like through the money you raised and getting more connections in the space and just kind of networking, and then just like, hey, this Nathan has experience. He's
right.
Let's get him on some contract basis and get some advisory.
Well, what I found, first of all, financial advisory is a very small niche. Even though there's tons of asset managers, there's hedge funds, but that's a different segment because they're focused on their asset class. Mm-hmm. And so financial advisors are more generalists that can say, hey, you should have a little bit of this hedge fund. You should have some fixed income. You should have some equities. This is how you should be diversified. And I'm kind of your right hand, Mr. Client, where I can tell you this is where you should be investing.
Yeah.
So tons of my different relationships from, past work, different sort of clients started reaching out, and crypto obviously has only gained in popularity. So more and more people are like, hey, I want to learn more. The other thing that's worth mentioning is financial advisors are, I don't want to use the word scared, but I don't know that there is a better word than that, to take a deep dive into a rabbit hole, because there is so much ambiguity, so much lack of information, so much misunderstanding in crypto that a lot of financial advisors just don't know. And because they don't know, when a client asks you, hey, should I invest in crypto? Financial advisors automatically say, too volatile, don't do it.
Yeah. Don't even do the research, really.
Right. And so and that's not a knack on financial advisors. That's just because of where the industry is. Mm-hmm. Now, what I'll tell you is in the last 12 to 18 months, that answer is no longer valid for clients. It's like it's not acceptable to be ignorant on crypto anymore. And a lot of financial advisors are realizing that. And so a lot of them are getting informed. And so I'm trying to build a niche for myself in the crypto advisor type of role. And I think that there will be more and more of that. But the truth of the matter is, eventually, crypto should be part of every person's portfolio. It should not be 100%. Should not be, a large part of it, given its volatility. But as a portfolio advisor, as a financial advisor, I would always recommend someone have, a portion of their portfolio in crypto. You can make the argument for 2, 3, 4, 5%.
Mm-hmm. Yeah. What? That's cool. What, in terms of your relationships, about how many? I know there's been a lot of like CoinDesk they on some of their podcasts they say how many institutions percentages are looking to buy crypto in the next 12 months, 18 months, 2026. They do these crazy polls about about all your relationships. What's the percentage of people who are like really want to like put their toe in the water of crypto?
Look, I'll say this. There's, out of all the institutions that I work with, 50% are ready or either already have crypto or are making moves, let's say in the extreme short term.
Mm-hmm.
Out of the remaining 50%, I would say 25% are still very anti-crypto and are scared to make a move. And there's the other 25% that are saying, look, we're making moves. We just need a little bit less volatility. We need to learn how to value it. We need to learn how it fits into our portfolio. Mm-hmm. Because, there's an argument to be made about an inflation hedge in Bitcoin, but on the short term, it's not a very good inflation hedge.
Yeah.
If you look at the data, when CPIs and inflation numbers go up recently, Bitcoin has been going down. Yeah. But over the long term, Bitcoin is a great inflation hedge.
Yeah.
Exactly.
Yeah. Zoom out.
Exactly.
Right? Yeah.
Exactly. You got to zoom out a little.
Out. Yeah.
Exactly.
Interesting. What, I guess for like a newbie or someone watching this, right? You may hear about Bitcoin, right? Or you heard about Ethereum, or you heard about Doge. It's probably like how Elon Musk, whoever your friend told you about crypto, or I'm pretty sure we might have like real industry professionals watching this as well, right? But for people who just don't know about the space that well, right, and they hear about all these coins and people say, oh, I can't afford Bitcoin, which you can fractionally buy crypto, right? Yes. You don't have to buy a whole share of anything. But they start bottom feeding into the altcoins. Can you talk about just the entire market capitalization and just the different coins and your viewpoint on where we are, not just in the cycle, but just like, okay, your lens, like as a newbie, but you're Nathan. Like you have the brain of Nathan.
Right. So, I get that. I think it's important to talk about what the difference is between an investment and a trade and
speculation.
A speculation, like a gamble. I was going to use the word gamble, right? Because it's, I think a lot of people get caught lying to themselves and saying, oh, I'm going to invest in this and make 100x and look what happened to Doge. But they don't hear about all those other coins that went straight to zero and what are formerly known as rug pulls or informally known as rug pulls. So they don't hear about those because they're, less informed in terms of the industry. Yeah. If I were, and when I talk to friends, acquaintances, individual investors that are looking for some guidance, I always tell them, look, if you don't have any crypto, just buy a little bit of Bitcoin. Mm-hmm. If you want to go beyond Bitcoin, sure, buy some Bitcoin and some Ethereum. And both of those are great investments long term. They have the best potential to reach real network effects and be the currencies of the future or the assets of the future. Beyond that, there's tons of really good potential investments, but they require a little bit more knowledge and at least the ability to keep an eye on it. And that goes, it's the same principle when you're looking at the stock market. It's the same principle when you're looking at any sort of investment.
Yeah.
If you want to put some money to work and you're looking at the stock market, are you going to buy an obscure gold mining company that just issued some equity and is trading, OTC or pink sheets, or are you going to buy Apple and Microsoft? I can't guarantee that in 10 or 15 years, Apple and Microsoft are going to be around. But if I had to make a bet, I would more willingly put my cash in something like Apple and Microsoft than an obscure company.
Yeah.
And the other point also to consider is, when you're investing your money, you shouldn't be like, if you're trying to get rich quick schemes, you should be very inherent and understand the inherent risks of that. Because if it would be easy to get rich overnight buying a coin, everyone else would be doing it.
Yeah.
Right. So if that's not the case, the recommendation from my part, and none of this is financial advice, just to throw that disclaimer out there.
Yes.
The way I would be thinking about it is, hey, I want to put some money aside. I want to invest for the long term, for the future. So over 10, 15, 20 years, I've had some good returns that have outpaced inflation and a little bit more. I want to buy something that is safer in the realm of crypto. And for that, I'd be looking at top 10, top 20, top 30 coins by market capitalization.
Yeah, exactly. When you say inflation, a lot of people might know what this is or not. What do you mean by inflation?
So there's a great way to describe inflation. There's easy ways to describe inflation. If you went to buy a Big Mac 10 or 20 years ago, it might have cost you 50 or 60 cents. Now, I don't know. I honestly haven't bought a Big Mac in a long time, but I can tell you it probably cost $1.80, $2. The point of inflation is it tracks what the power of your dollars can acquire. So how much does $100, $1,000, $1, what can you acquire today in terms of goods and or services? And how does that change over time? So if a gallon of milk costs 10% more next year than today, the inflation that year was 10%. And so the central bank in the US and in Europe, for that matter, they target there is a healthy rate of inflation, which is around 2%, is what most people look at as healthy inflation, because prices do go up, because the economy grows, there's more people, there's more money, etc. So that's what inflation is. And another important point about inflation is money supply, which essentially is how much money is in the system. And it's worth noting that in the last 18 months, more money that has ever been pumped into the U.S. economy before has been pumped in the last 18 months.
Yeah.
So that's worth noting as well.
Yeah. And for the viewers, so there's been a lot of talks, especially in the Bitcoin community and crypto community, that inflation is transitory, right? And
right.
Yeah, these Bitcoin libertarians, people that talk of that, hey, we've been seeing inflation. We've been talking about this for a long time. It only makes Bitcoin stronger, like we talked about before. Over the long term, Bitcoin's a highly more performing asset. It has been that hedge against a diminishing purchasing power of a dollar. Is inflation transitory, and what does it even mean? And then what does it have, whether inflation is real or not, in terms of like it's gonna skyrocket? What is the future in terms of cryptocurrencies being another method of payment and transaction, and Bitcoin being a store of value?
Okay, those are all really good questions. So what is transitory inflation? The concept basically has been used recently to describe saying, hey, yeah, prices have gone up because we just opened up from COVID. Everyone's out and about. Everyone's building houses. Everyone's buying all these goods. And in a short amount of time, there's not enough goods to go around for everyone. So what happens? Prices go up.
Yeah.
Right. And there's the graph of lumber, and the price of lumber just skyrocketed, from 1 month to another. And what does that mean? It costs a lot more to build a house. Right. And so the argument for transitory inflation is that those price pressures will not remain. And it's just a momentary price pressure where there will be more supply coming in. Prices will normalize, and inflation is not going to be out of proportion, right? That's the argument. Your other question on crypto and Bitcoin being a method of payment and a store of value. Look, I think that Bitcoin has already created its moat in terms of the amount of liquidity that we're seeing, the market cap. One of the most interesting charts that I've seen in a long time is one, and Pantera Capital shared this recently, and they spoke about it again today, is they price the dollar in other assets. So they use gold, they use Bitcoin, they use lumber, they use tons of other assets to price the dollar and how it moves over time. Bitcoin is the one, gold is the one that has performed the worst out of all other real assets like lumber and Bitcoin. So what that means?
Why? Yeah, why is that when gold's supposed to be this safe haven, 5,000-year-old? It's the most durable, real money.
100%. So before I answer that, I'm going to tell you a quick story.
I love stories.
At JP Morgan, there are clients that pay as a service, and this is everywhere in the world. They pay as a service to buy bars of gold, and they pay someone in London to store the gold, physical gold. They're paying rent over there just for the space, and they're holding gold, physical gold, as part of their investment portfolio. They're never going to do anything with that gold. They're never going to, give it as a gift. It's strictly an inflation hedge.
Yeah.
So the market cap of gold, round numbers, is 10 trillion. Crypto right now, we're standing around 1.3 trillion, and Bitcoin's like 600 billion.
Yeah.
Okay. The reason that gold has underperformed is because Bitcoin's taking market share. People are like, if I'm gonna buy gold just to be an inflation hedge, and if I'm gonna buy gold and pay rent, and I can't transfer it anywhere, I have to keep it with the person that's custody. I can't go and see it. I can't send it anywhere. I can't sell it immediately. It takes time, and I have to depend on these third-party institutions to hold it for me. There's a big movement in crypto, which not your keys, not your crypto,
Yeah.
So that's huge. And I think that's why gold has underperformed, because Bitcoin has taken a large market share. And I think it will continue to take market share from physical gold and that market. And Bitcoin, from a transaction point of view, I don't think it is the ideal digital currency to be sort of a transacting, like I'm going to buy a cup of coffee here, I'm going to pay for it in Bitcoin. It's not built for that, in my opinion. It is built for, look, I have a checking or savings account, and instead of having it in cash at an institution, I'm going to have it in Bitcoin.
Yeah, that's your new savings rate.
Exactly.
And we've had this discussion. You've seen the debates in the Bitcoin and the crypto community about it's supposed to be staying a peer-to-peer currency versus it got turned into a store of value. And we won't get into that rabbit hole today.
Right.
I definitely want to get you nerding out on DeFi.
It's all good.
I know you're thirsty for it.
Yeah. We'll talk about it.
Yeah. So like what, why, I guess like in short, like based off your thoughts and your research and being in the space for a while, why did, I guess we have a finite supply for the viewers that don't know, right? There's only 21 million Bitcoin that will ever be minted, right? 20.9 basically.
Right.
But you know, I guess why won't it be, why is it viewed as more of a store of value versus what its intent when it was invented to be a peer-to-peer solution? Like you were a prime example, right? Colombia in the US,
Right.
send money back to the family direct.
Yeah. So this is a thing. I think that in many senses, Bitcoin will be able to be a method of transacting for large transactions.
Yeah.
Like, people have bought houses and cars with Bitcoin.
Yeah.
And
Wow.
there's nothing wrong with that, right? And it works and it's efficient.
Mm-hmm.
The thing with Bitcoin is that blocks can take from a blockchain perspective. The block can take anywhere from a few minutes to an hour. At most, I've seen like 8 hours, but I don't think that much anymore. To complete a block, to complete a transaction, depending on how much you're paying in fees. Mm-hmm. So if you're sending millions of dollars or hundreds of thousands of dollars and you're purchasing goods from your supplier overseas, Bitcoin works for that. It makes sense. You're paying very little fees as a percentage basis. Mm-hmm. But if you're buying a $2 or $3 coffee at your corner store, that's not what Bitcoin is for.
Yeah.
And I think this is a great segue to DeFi.
There you go.
What is a great what has been a great product market fit recently are stablecoins. Stablecoins, which are pegged to fiat currencies, but transact in the same way crypto do on a blockchain, on-chain transactions, are part of the DeFi ecosystem. DeFi, just for the viewers, stands for Decentralized Finance. And they are part of that ecosystem and are great ways to transact and send money from one place to another for very low fees.
Yeah. And those fees are lower than if I just send money in regular US dollars. What's the difference? Is it just the fees?
Yeah. I mean, the fees, the timing. I mean, let me tell you, and I'm sure you've seen this, when you're opening your account at Robinhood, for example. If you sign up for Robinhood, you're going to fund your account. How long does it take for you to get your $100 in there? It's not instant. It's not same day. It usually takes at least 24 hours. Mm-hmm. And so when you're in crypto, when you're in DeFi, and you're sending some of your stable coins or some of your crypto from one wallet to another, it's a couple minutes at most, sometimes a few seconds usually.
Yeah.
So there's tons of potential there, and a lot of things that, like, as an individual, I think it's worth diving in deep into the DeFi world.
Yeah. If I hear decentralized finance for the first time, and where do I start? Like, what are some stable coins? Why is it called stable coin? Like, give me the simplest terms of what I can do or a viewer can do to understand what that is. Of course, I see the easier access, right? I can use that. What is like the beginner stages? Then how do I even get stable coin? And then I have a couple questions about, I know there's been like some stable coin drama recently.
Oh yeah, a lot of drama.
Yes.
So decentralized finance, just to give a little bit more background, has been around for a while, but really started to pick up the summer of 2020. Mm-hmm. They called it DeFi summer.
Yep.
A lot of people called it DeFi summer. So stable coins are part of DeFi, and they help a lot of investors, trade. They at first, to give you a little bit of background, Tether was the first stable coin ever created, USDT. Mm-hmm. And it was really just used as a faster trading pair. So if I'm buying and selling Bitcoin, instead of going to US dollars and having it in the banking system, I go to USDT, and it's much quicker, and I can move between exchanges, and allows me to take advantage of arbitrage.
Mm-hmm.
So I think the drama you were talking about was probably around Tether, because Tether is basically what does Tether do, and how do stable coins exist?
Mm-hmm.
Tether says that they will take one of your dollars and exchange it for one USDT, and they will hold the dollar, the actual US dollar, on their balance sheet, on their deposits, and make sure that the price of USDT stays always at 1. So it doesn't move. It's not meant to go up.
Mm-hmm.
And so by doing that, they have billions of dollars on their balance sheet, and there's billions of dollars of USDT issued.
Mm-hmm.
The problem and the drama that has been around that is there's been a lot of skepticism about what they're doing with that money, about how much they actually have, if they're issuing more USDT than the dollars they're receiving. So that's part of the drama. But there's tons of new stable coins that have came out recently. USDC, for example, is a great one by Circle. Circle's backed by Coinbase and a bunch of other big names in the industry, and they've recently gone public. And when a company goes public, it makes me a lot more comfortable personally, because I know they're having to release financial statements. They're being audited by third party. I believe USDC and Circle is audited by Grant Thornton, which is a large accounting firm that's willing to put their stamp of approval on their financial statements. So that's big for me. And so DeFi, really what it is the ability for you and me, regular people, to interact and be part of financial transactions where traditionally, in traditional finance, we would never be able to. For example, lending. Like, you can loan money to your friend, and you can charge them an interest, but on a real basis, you can't go to a marketplace and see loans and offer loans of different securities of US dollars. And so DeFi allows you to do that and earn interest for that. And so DeFi has created all these marketplaces where you can earn yield on your crypto, and that really is a new way of giving, gives crypto a way to provide cash flow, which is huge.
It's simply saying that you, Nathan, are a bank. You are a financial institution.
Exactly.
Right.
Exactly.
It's giving power. That's giving power back to the people.
Right? Huge.
Yeah. So what? Why do stable coins need a 1-to-1, right? Of course, for volatility purposes, but what's like the value in doing that, right? When they just have all this commercial paper on their books, right? Isn't that kind of risky?
So there's an inherent risk in having centralized stable coins.
Mm-hmm.
So new stable coins like DAI and Luna, which is UST, they created decentralized stablecoins, which are algorithmic. So instead of them being pegged and replaced by a dollar held on a balance sheet, they actually built an algorithm where, because of the backing coin, like Luna, for example, in the Terra ecosystem, they have a burning mechanism where if someone buys or wants UST, they convert a Luna and they expand the supply to match the UST issuance. And when demand falls for UST, they burn Luna coins. And so it creates a different dynamic. But the reason that the stable coins are really interesting, if you ask me, is it allows people to interact with crypto without the fear of the big price swings that you said. The fact that there's less volatility and one of the family offices that I worked with, for example, they are doing stablecoin yield farming, and you can earn much better interest rates than you can get, in the open marketplace.
Yeah.
And you know the risks that you have, but obviously you're getting compensated for that risk.
Yeah.
Right now, where the interest rates are, you're basically earning real negative yields. And what that means is after inflation, you're getting negative yields. So you're actually losing money over time.
You get eaten up. Yeah.
Exactly.
Wow.
Exactly.
Why are crypto markets so volatile versus equity markets?
The short answer is, if you imagine a brand new asset class that is constantly being priced, there's going to be a ton of volatility. That's why startups and private companies don't trade in the stock market.
Yeah.
And they're inherently private. And every 2-3 years they raise money at a valuation, and you see what the company is priced at. But crypto is a totally different path. It's literally was public from day one. And so that creates a brand new ecosystem that is changing every day. And there's tons of things that are impacting, like regulation, headlines, people talking about it. That impacts the value. And people look at short term. There's a saying that, sell the rumor, buy the news.
Yeah.
Or buy the rumor, sell the news.
Yeah.
And the truth is, there's tons of information that will affect a price and the asset price. So that's why it's volatile.
Yeah, it has that public scrutiny from day one.
Exactly.
People on the project, people that have different motivations.
Exactly.
Short sellers, you got hodlers, you got
and there's tons of speculators, tons of people that are trying to trade and profit off arbitrage opportunities. And usually those are fine, but they create more volatility in the space where there's less regulation. And so I think, to talk about regulation for a moment, I think that regulation, as long as it is adequate, will be very good for the crypto market and will bring more institutions in.
Yeah, so it won't be 50%, 90%, 80%, 25% drawdowns on one day.
Eventually, I don't think it'll be like that.
Yeah.
But I think, for the short term, it's fine. But, over time, Bitcoin has outperformed every single asset class out there. Mm-hmm. And it's not like 1 year, 2 years. I'm talking about over 10 years.
Yeah.
So
it's stand the test of time. The people.
Exactly.
There's a Bitcoin internet site that says how many times people said it's going to die on television. People have said it's going to die like over 500 times on TV, and it still hasn't died. Yeah, I have to see that offline. But it's really interesting. To that Bitcoin point, do you think, like, you got the Church of Bitcoin, you got like Bitcoin is very highly regarded and has brought a lot of awareness. It is the first Satoshi, thank God, to whoever you or they are. Right. Do you think that Bitcoin will remain the largest market capital, the largest cryptocurrency? Or will Ethereum or other coins have maybe more applicable, more use cases take over future?
It's tough to say because that's like a long-term question. I think that Bitcoin will always be around, and Bitcoin will be kind of the grandfather of crypto. Right now, it's just the father.
Yeah.
Still
running the house.
Yeah, exactly. It's still running the house. Eventually, it's going to be like, all right, you guys take over. Yeah. So in terms of market capitalization, it is very possible that others outgrow it because there's a lot more use cases. Yeah. But for the medium term, let's call it 5 to 10 years, I think that Bitcoin as a store of value, as adoption for crypto grows, will be the leading indicator, because people are going to start saying, hey, I want to put my money, instead of putting a checking account, I'm going to put in Bitcoin, and there's still so much of the world that doesn't know anything about Bitcoin. They don't have a wallet address, and that's where Bitcoin is going to lead. Eventually, when everyone has Bitcoin, other coins will continue to grow.
Yeah, we're still very early.
Yes.
What year do you think we're in? Like, if you had to say, like, Web one, like, I mean, we were kind of young in that time, but like Web one, like in the late '90s, early 2000s, what relative year are we in?
I think if we're talking baseball, because it makes sense, I think we're at the bottom of the first inning.
Oh gosh,
I think we're at the bottom of the first inning.
Yeah. And where are we at in this current market cycle? So people say we have bear and bull markets in crypto. Where do you think we are in this bull market, if you would say this is a bull market?
I mean, look, again, I'm not a trader, so I'm not someone that is in the business of predicting short-term price movements and being that. What I am willing to say is that over the long term, right now is a great time to buy. We're very early. Exactly. Whether the next bull run comes in the next 6 months, in the next year, the next 2 years, it's coming. And there may not be a better time to buy than today. You never know. That's why dollar cost averaging is so powerful, because you can always buy a little bit more, buy a little bit more, and then you have a nice little exposure.
Yeah. Nice. What excites you most about decentralized finance? Like, what areas? Because it's such a big. We can't even cover it in 1 hour. What excites you most about decentralizing the finance industry or finance world?
Well, I think number one is being able to generate cash flow with your crypto. Is a super interesting place. I think decentralized exchanges and liquidity mining is really interesting. Also, we didn't mention that, but it's basically using your coins to provide liquidity for others to use them to trade. You can earn a part of that fee. So, like, traditionally, banks had huge, market makers, and they were the ones buying and selling the same securities and earning a fee. Now you can do that, and that's really exciting.
Yeah, that's crazy. Like, it's almost bringing free market capitalism back.
Exactly.
Everybody could be a market maker, and there's true price discovery.
Exactly.
Unless for the audience, like, when there's real discovery, it's actually like both sides, buyer and sellers, choosing a point instead of the market deciding it for you.
Exactly.
Right? When it's fixed, then that means it's controlled centrally. Decentralizing means it's different nodes or different people, right, making decisions together, and that's consensus. That's a blockchain mechanism.
Exactly.
That's really cool. What does the world look like to you in the future? 10 years. What does it look like, since this is back into the future?
I'll share something that I've shared a couple times, not many times, but I believe that Bitcoin mining is going to lead to green energy adoption across the board. And what I mean by that is, I think that in the future, we will be living in homes with solar panels on the roofs, and those solar panels will be powering a mining rig in your house. And so everyone's going to have a little Bitcoin mining rig, and that mining will be using solar energy or any renewable sort of energy, and you'll use that to pay for your household bills. And I think a lot of people talk about universal basic income and giving people the ability to earn income without having to work for it. I think that is going to drive adoption of eco-friendly and drop the amount, stop global warming to a certain extent. And I just think that that's like a point of view that I have that is not necessarily contrarian, because other people have mentioned it, but I think that Bitcoin mining can actually be counterintuitive and lead the way for green energy.
Yeah, that's a whole nother podcast. But people don't really understand Bitcoin. I think that's the least understood, even in the professional crypto people like us. And then, like, people talk. I think that's why Elon was trying to get in to really understand it. I don't think he understood it, but like Bitcoin is less energy. If JP Morgan runs way more energy than Bitcoin does, right?
Exactly.
With Fargo, the banks we used to be at, like they run so much more energy.
It's silly. It's silly to say that crypto mining is not energy efficient compared to the infrastructure that we have to process payments that we are using right now.
Yeah,
silly.
Exactly. And it can kind of be confusing because it is electrically, digitally run versus like, oh, I turn on my lights at my house. But yeah, that's an interesting take. We had to talk more about that, man. But I know we're up on time. This is awesome. This is cool. What's your focus like for the rest of the year with like advising these family offices and funds? And then where can people follow you and keep up with you?
Definitely. Obviously, I love chatting with you and love doing it offline, online, whenever it comes again.
Yeah.
I am focused on helping institutions, family offices, and high net worth individuals in LATAM specifically, where my markets are. Get invested in crypto, get invested in DeFi, help them understand the markets, help them get invested. And people can find me on LinkedIn or on Twitter, Nathan Bekerman. There's not many others with that name. No C in the Bekerman, BEK.
Yes, you're right.
And I just love connecting with the community. That's what I love about crypto. It's one of my favorite things that everyone's so welcoming and wants to talk and wants to learn. And there's so many people out there who just want to learn from each other. And I think that's super cool. Like Twitter, Discord, Telegram, all these group chats are amazing.
Yeah, there's almost too many to keep focused, but that's the cool thing about it. You're right. Like just how you commented on my post and like asked about stablecoins being DeFi, and I was like, of course. And so that's awesome. And so, man, thanks, bro. We're like, this is what it's all about, just helping people break into the future. Are you in Miami or are you in New York?
I'm in Miami.
Miami, man, I gotta take a trip.
Whenever you're ready, bro. We'll welcome you here.
Yes, the capital. That's the crypto capital of America.
Crypto capital of America, and also the capital of Latin America, Miami.
Hey, that too. You got to put me on. I
got you, bro. I got you.
For sure, man. Thanks for your time, bro. And we'll be talking soon. You got to come back as well.
A pleasure. Thank you very much. Appreciate it, my man. Take it easy.
All right, man. Peace.
Cheers.
That was my guy, Nathan Bekerman. You can follow him on Twitter, on LinkedIn. Give him a shout. Ask him some questions about DeFi and about the crypto space investing. You heard it. Hope you learned a lot today about what decentralized finance is, some of his journey, even some tips about entrepreneurship and life skills. So, hey, you guys know what we're doing. We're breaking into the future. All things crypto, blockchain, investing, AI, Internet of Things, energy, solar, cannabis, psychedelics, everything. Healthcare, frontier tech, deep tech. It's the future. Are you coming with me? Love you guys. Peace.